Are you paying more in taxes than the world's richest men, Jeff Bezos and Elon Musk? Surprise, surprise, you just might be.
I never pay taxes. If there's a way not to pay, I never pay.
My friend Warren Buffett pays a lower tax rate than his secretary.
The wealthy are definitely undertaxed relative to the general population.
These same folks are paying taxes at one of the lowest rates in 50 years.
Filing taxes is something that every small business owner has to deal with, but very few actually enjoy the process. In fact, many people dread it. The issue is that some business owners only think about taxes when the April 15th deadline is right around the corner. However, tax planning is something that should be considered all year long. If you don't, you may end up making costly mistakes that could have been easily avoided. In this video, we'll go over 6 common tax mistakes that small business owners make and how you can avoid them. By understanding these mistakes, you can be more confident when it's time to file your taxes and ensure that you're not paying more than you should. Mistake 1. Missing the tax filing or payment deadline. One of the biggest mistakes that small business owners make is not filing their taxes on time or failing to pay what they owe. The IRS takes deadlines very seriously, and if you miss them, you will face penalties. If you don't file your tax return by the deadline, the IRS charges a penalty of 5% of your unpaid taxes per month. This continues to add up until you finally file your return. Not paying your taxes is just as serious. If you fail to pay, the IRS will charge you a 6% interest rate along with a late payment penalty of 0.5% per month. These penalties add up quickly and can make it even harder to pay off your taxes later. The worst part is that ignoring the problem doesn't make it go away. The longer you wait, the bigger the issue becomes. If you think you won't be able to file on time, you can request an extension. The IRS provides forms to help you do this. However, an extension only gives you more time to file. It doesn't extend the deadline for paying your taxes. You will still have to pay what you owe by the original due date, or you will face penalties. If you don't have enough money to pay, you should look for other ways to work things out, such as setting up a payment plan with the IRS. Mistake 2. Failing to pay. Estimated taxes throughout the year. Another common mistake is forgetting to pay estimated taxes. Unlike employees who have taxes deducted from their paychecks, small business owners need to make these payments on their own. If you are self-employed or run a business as a sole proprietor, partner, or S-corporation shareholder, the IRS expects you to make estimated tax payments if you expect to owe $1,000 or more when you file your return. If you run a corporation, you have to make estimated tax payments if your corporation will owe $500 or more. Many business owners don't realize this until they get hit with a big tax bill at the end of the year. The best way to avoid this is to stay on top of your estimated tax payments throughout the year. You can work with a bookkeeper to determine how much you need to pay each quarter. The IRS also provides a Form 1040-ES worksheet that helps you calculate the correct amount. By making these estimated tax payments, you can avoid a huge tax bill at the end of the year and prevent any penalties for underpayment. Mistake 3. Not taking advantage of business deductions. Many small business owners end up paying more in taxes than they actually owe because they don't take advantage of business deductions. The IRS allows businesses to deduct many expenses, which helps lower their taxable income. Some common business deductions include office supplies, advertising costs, licenses, equipment, travel expenses, and even startup costs. These deductions can significantly reduce your tax burden, but you have to know what you qualify for. If you're unsure about which deductions you can claim, consider consulting a tax professional. They can provide you with a detailed list of deductions specific to your business. By keeping track of your expenses and claiming the right deductions, you can keep more money in your pocket instead of overpaying on your taxes. Mistake 4. Not keeping track of business expenses properly. Even if you qualify for certain tax deductions, you won't be able to claim them if you don't keep proper records. Many small business owners fail to track their expenses throughout the year, which makes it difficult to take advantage of deductions when tax time comes around. To claim deductions, you need proof that you actually incurred those expenses. This means keeping receipts, maintaining a travel log if you deduct mileage, and categorizing your expenses correctly. If you don't have these records, the IRS could deny your deductions in the event of an audit. The best way to stay organized is to work with a bookkeeper year-round. A bookkeeper can help you track all your expenses, save important receipts, and categorize everything correctly. When tax season arrives, you'll already have all the information you need, making the filing process much easier. Mistake 5. Mixing business and personal expenses. Another big mistake that small business owners make is not separating their business and personal expenses. When you mix the two, it can create a financial mess that is difficult to clean up when it's time to file your taxes. It can also make it harder to track deductible expenses, which could result in overpaying your taxes. To avoid this issue, always keep your business and personal finances separate. This means having separate bank accounts and credit cards for your business. Any expenses related to your business should be paid from your business account, and personal expenses should come from your personal account. Additionally, instead of taking money from your business account whenever you need it, consider paying yourself a salary. This will make it easier to manage your business finances and avoid unnecessary tax complications. A bookkeeper can help you set up a system that keeps your finances organized and ensures that your business expenses are clearly separated from personal ones. Mistake 6. Not hiring a tax professional. Many small business owners try to handle their taxes on their own, thinking it will save them money. While this might be fine for very simple businesses, it can be risky for more complex business structures. Tax laws can be confusing, and if you don't understand them, you might misfile your return or miss out on major deductions. A tax professional can help ensure that your return is filed correctly and that you are taking advantage of every possible deduction. They can also provide guidance on tax planning strategies to help you save money in the long run. When choosing a tax professional, make sure they are certified and have experience in your industry. You may also want to ask for references or get recommendations from other business owners. Hiring a good tax professional might cost money up front, but it can save you much more in the long run by helping you avoid mistakes and unnecessary tax payments. Filing taxes might only happen once a year, but tax planning is something that should be considered all year long. Avoiding these common mistakes can save you money, reduce stress, and make the tax filing process much easier. By making sure you file and pay on time, staying on top of estimated tax payments, taking advantage of deductions, tracking expenses properly, keeping business and personal finances separate, and working with a tax professional, you can set your business up for success. If you found this helpful, do me a favor. Hit that like button and subscribe for more tips on managing your business finances. Remember, it's your money. Keep more of it.